The world of cryptocurrency is exciting. It promises big returns for investors. But let's be clear, it's a roller coaster. Crypto prices swing up and down dramatically. This volatility makes it high risk. But with high risk comes the potential for high reward. Don't invest what you can't afford to lose. Education is key. Understand the technology and the specific cryptocurrencies you're considering. Remember, knowledge is power. The more informed you are, the better your decisions will be. Investing in crypto is like investing in the early days of the internet. It's full of potential, but it's important to be cautious. Take your time and never stop learning. Long-term crypto investing is like planting a tree. You start with a small seed, and with time and care, it grows into something substantial. You nurture it and wait for it to grow. This process requires dedication and patience. It's not about getting rich quick. Quick gains are often fleeting and come with high risks. It's about believing in the long-term potential of blockchain technology. This belief is what drives sustained growth. A great strategy for long-term investors is dollar cost averaging, or DCA. This method helps mitigate the impact of market volatility. With DCA, you invest a set amount of money at regular intervals. This disciplined approach can be very effective. This could be weekly, bi-weekly, or monthly. The key is consistency. DCA takes the emotion out of investing. It helps you stay calm and focused. You buy whether the market is up or down. This way, you avoid the pitfalls of market timing. This strategy helps you average out your purchase price over time. Long-term investing requires patience and a steady hand. There will be ups and downs in the market. Volatility is a natural part of investing. Don't panic sell when prices drop. Stay the course and trust in your long-term strategy. Short-term crypto trading is more active. It's about trying to profit from the market's short-term price swings. This type of trading requires a keen eye and quick reflexes. Think of it like surfing. You're trying to ride the waves to make a profit. Just like a surfer needs to read the ocean, a trader needs to read the market. Technical analysis is key for short-term traders. It involves a deep dive into the data. This involves studying charts and indicators to identify patterns and trends. Recognizing these patterns can give traders an edge. It helps you predict future price movements. Accurate predictions can lead to profitable trades. Traders also need to understand market sentiment. This is the psychological aspect of trading. This refers to the overall mood and attitude of the crypto market. Sentiment can drive market movements. Is it bullish or optimistic or bearish, meaning pessimistic? Knowing this can help you make informed decisions. Monitoring news, social media, and trading volume can give you insights into market sentiment. Short-term trading is time-consuming and demanding. It requires constant monitoring of the market and quick decision-making. It's not for everyone, but for those who master it, the rewards can be significant. So, which strategy is right for you? This is a question many investors grapple with. Well, that really depends on your financial goals, risk tolerance, and time commitment. Each approach has its own set of advantages and challenges. Long-term investing is ideal if you're looking for steady growth over time. It allows you to ride out market fluctuations. It's less risky than short-term trading and requires less time. You can focus on other aspects of your life while your investments grow. But if you're comfortable with higher risk and have the time to dedicate, short-term trading might be a better fit. It can be more exciting and potentially more profitable. Remember, there's no right or wrong answer. Both strategies can be effective depending on your personal situation. The best approach is the one that aligns with your individual circumstances. Tailor your strategy to fit your unique needs. Before you dive into crypto, it's crucial to assess your financial situation. Understand your budget and financial commitments. How much can you afford to invest without impacting your financial well-being? This is a key question to answer. Investing should never come at the expense of your financial security. Always prioritize your financial health. The crypto market is constantly evolving. New projects, regulations, and trends emerge all the time. To navigate this dynamic landscape, you need to stay informed. Follow reputable crypto news sources, join online communities, and engage in discussions. Don't be afraid to ask questions. Continuous learning is essential for success in the crypto space. Be prepared to adapt your strategies as the market changes. For beginners interested in exploring the world of decentralized finance, or DeFi, and generating passive income, my ebook provides a comprehensive guide. It's packed with valuable insights and strategies to help you get started. You'll find the link in the pinned comment below. Remember, knowledge is your most valuable asset in the crypto market. Like and subscribe. See you tomorrow.